Greece, how low can you go? Death row. What a brother know. Once again, back is the incredible rhyme animal, the incredible D. Ryan wanted some rapping. I don't know. I've been up since all day, all night. Hey, I was talking to Daniel at 12:30 in the morning. Yeah, so anyways. Yeah. I just got to have my Daniel time. All right, hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi. Ni hao ma. My name is Wayne McDonell. Namaste. I am the Chief FX Market Strategist for TradersWay. I hope you like my TradersWay colors today. Right? Boom, 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 boom. Thank you for being a client to TradersWay.com. We appreciate you. We do our best to support you and help you. Thank you for choosing us as your prime brokerage firm for your successful Forex trading business. Whether it's started now or started in the future, we appreciate your loyalty and respect. Thank you for being here Monday through Friday at Forex.Today, 7:30 a.m. Why do we do that? Well, it's 2 hours before New York opens, and it's approximately London lunch. Good time to synchronize our watches. So that we got our gray matters plowed together. Resistance is futile. Looking good, Billy Ray. Yeah. I guess I got to put that up there for a second, huh? Oh, webinar software is too slow. Forget it. All right. So anyways, let's move on to .com. You want to do some technical analysis? Yeah, why not, huh? I think it's this button. There we go. Ooh, snap. Yeah, the time change and stuff, it doesn't matter if you don't sleep. Like, the time changes. Like, I don't use time. No, I don't like it. It's inconvenient. I've decided to pass on time. I just don't like it. Yeah. Time is for losers. All right. Right. So, like, who has all the time in the world? Extremely wealthy people, extremely poor people. They're like, what time is it? And they're like, I don't even know what day it is. I think it's October. Right? October. Yeah. You're like, I think it's about somewhere between 2 and 4. Yeah. I mean, seriously, right? Time is it? Squirrel season. Give me some moose. La 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 la. Gee, my connection's slow today, eh? Oh well. So, you know, I want to kind of start where we left off. Yesterday we had an event-driven strategy, right? A high volatility event-driven strategy, followed by sort of blah, 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 talking by the Fed, right? Or, sorry, ECB, whatever. So there's the news release, volatility, and then more, I don't know if you want to call it volatility or aftershocks. but the press conference is less of a timing issue and more of like a maybe what is said or maybe what is misunderstood. Okay. So I wanted to talk about something that I pointed out after the initial news event. Do you remember how I said that there was the 1 minute and you could catch like the 25 pip, let's say, instant reaction? And then you would kind of repeat the process on a 5 minute chart. And that would take more of like a half an hour later, right? And then I said, then you could repeat it on the 15 and so on and so forth, right? And you see this in non-farm payrolls too. It has nothing to do with like the ECB. It's just a high volatility event-driven strategy. But this idea that the same pattern would occur on a 1 minute, a 5 minute, a 15 minute, so on and so forth. Okay, that's called fractal geometry. Because remember, if you're making a decision on a 15-minute chart, you're not even watching the 1 minute chart, but you're watching for the same things. You understand? If you're a bear and there's a directional move in the bear, bearishly, what is it that you're looking to do? Well, you need to sell a retracement. So if you're watching a 1 minute chart, you're like, oh, that was bearish. I need to sell a retracement. If you're a spot trader, not a scalper, you say, oh, look, it moved bearishly. I'm going to sell a retracement. What about sort of like a daily swing trader using an hourly chart? They're like, oh, look, a bearish move. I think I'll sell a retracement. You get that point? I mean, I know it's, Captain Obvious stuff, but you know what? If you actually think about it, it's pretty powerful. It's a powerful concept of fractal geometry that you could have 5 people in the room. They all agree what to do. They're all looking for the same thing, but they're observing from different points of view, so it's relative. Do you remember physics class, the theory of relativity? Einstein? It's all relative. Okay? So for example, let's say 3 of us are on 3 different asteroids. One's heading straight at Earth, right? One's heading straight at Earth, but from the other direction, and another one is heading straight at Earth this way. And all at different speeds. Well, what they're observing is quite different from their point of view. It's relative to their point of view. So we're all everyone's staring at Earth, right? But coming at it from different angles and at different speeds and all that kind of stuff. So we all look at the market, say bearish. It's kind of like saying, oh, there's a planet in the way, right? And then we want to look at it from our point of view, from our asteroid. Well, is your asteroid a 1 minute chart, a 5 minute chart, a 15-minute chart, right? And you're going to observe from there. Of course, but relative, right, Marshall? Relative to your point in space-time. I don't know. We're not going to have a physics debate, are we? I'll have to roll up my sleeves for this. It's going to get messy, bro. Don't get blood on my shirt. It's like my favorite shirt. I'll have to take the whole thing off. Yeah. Anyways. Newton? Newton's an interesting bro, huh? He's an interesting dude. He's like, yeah, so I discovered this whole thing called gravity. We'll call it gravity. But I figured it out using calculus, which I invented about 6 or 7 years ago. I just haven't had time to publish it yet, right? And then, I write laws, and I'm a painter, and I do a whole bunch of finance stuff, and, what else do I do in a day, right? Like, Newton's one of those guys, like, that guy was smart, like, right? Like, no joke, he invented calculus. Some other guy, a Frenchman, I think, came out about 15 years later, and he's like, I invented this thing called calculus. And so he proved it, right? Like, here's my stuff. And he's like, and all of a sudden Newton's like, oh my God. So he went and showed, like, no, I invented it 15 years earlier. I just haven't really published it yet. I've been busy writing laws for the government, and I've been busy doing all these really interesting things, right? So if you go to Newton's hometown and there's a big statue of Newton, and it says, oh, he's discovered gravity, he'd say, really? I mean, that's it? It's like, that was a blip, right? That was a blip. That's all I'm known for? Amazing, huh? I don't know. I haven't invented a new math. I mean, I'm lagging here. So, anyways, let's go back to fractal geometry and chaos theory, the simple things, right? Marshall and I don't have to get into a fist fight over physics, I don't think. So, here's what I wanted to show. And I may not be able to. It's too far back. Hang on, let's play with this. Let's see if I can get this done. You have to use your bionic eye. Oh, now we'll never find it, huh? Stupid MT4. All right, hang on. Click, click, click. And this doesn't even look right. Don't you remember the original reaction? Didn't this 1 minute candle look a little different? Remember, it dropped and it came back, and I thought there was an opportunity. I guess it's about right. Yeah. So, okay, on the 1 minute chart, there was an opportunity. If you traded with me yesterday, right? It went blup, blup, blah. So you got a 3A2 or 50%. I think it was a 50% retracement. That's fine. Then there was this move. And this is the more realistic one because it's not like, blup, 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 oh, you should have shorted. 100 and something seconds is plenty of time, right? It's pretty reasonable to say, if you're waiting for direction, a giant red candle that took 60 seconds, right? And then, by the way, it did pull back and you could have sold it at 118.00000. I mean, that's possible. That's a sell way up here. But it's this move here where we were in somewhere in here, I think near the 382, and I'm like, this is where you'd sell. What do you think we should do? Should we do it? 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 Right? You guys remember that? And then I'm like, and all of a sudden, like 10 seconds after that, I'm like, well, it's done. Yeah, and Elias said bye. But right, I mean, that happened, right? Right? There, in that 120 seconds of time, there was about 10 seconds where I'm like, so you're going to do it? Are you 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 going to do it? It's too late. If you didn't do it, then you didn't do it. Fine, but it's too late, right? But anyways, so there's like sort of the 1 minute. Now this, I'm going to click 5, and I'm going to have to remove all of this. Okay. So on the 5, it's not that good. Gonna get that out of the way. It's not gonna let me never be able to do that. All right, so we got to go to the 15. So I think I can delete this now. Okay. On the 15, you have this. That's a nice little spot trade, right? Now, what do you notice between what is similar between the 15-minute chart in which you had an hour and 15 minutes to trade? Hour and 15 minutes, right? Half an hour, an hour. Oh, sorry, hour and a half. 90 minutes. What's similar between the one that happened in 90 seconds and the other one that happened in 90 minutes? They're both retracements, yeah. They're both bearish. They're both, yeah, they're all relative. Both in fib zones, yeah. What about pivots? Weekly central pivot is resistance, yeah. So what does that then say about one other piece that would be similar? Yeah, but what does that sort of technically mean? They're both the same what? Scenario. Price! Thank you, Ryan. It's about the same price. We're only talking about 4 or 5 pips different. It's like it's the same trade. The 90-second trade is essentially the same as the 90-minute trade. Down, 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 up, up, back to resistance, sell. Down, 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 right? Cool, right? Now, there wasn't a perfect 5-minute scenario. Oh, well, okay, sorry. That was probably due to the press conference. The fact that we didn't get much of a pullback on the 5-minute chart because the press conference was going on at that time, right? But anyways. Oh, we drew it? Did we draw it, Robert? Robert said I drew the Fibonacci retracement for the 15-minute. No. Well, all right. Yes, right before. Oh, okay, good. Then that must have been easier then, right? That's cool. I don't remember doing it, but it sounds like something I might do. Cool. Cool, brah. Sweet. Yeah, tricky when you take profit. Sort of tricky. Maybe. I mean, we could argue that point. But how do you feel about a confluence of a monthly S1, weekly, what is that? S2. Would you consider that support? The answer is, of course, it's support. And if you got out there, it's not the wrong decision. You say, oh, well, but it fell further. So? It's not you got something. I don't care about that. I don't even like the talk of that because that puts you in a weak position, right? Here's some peanuts. Thanks for working. Oh, great. At least I got peanuts, right? No, no, no. It's the decision. That gives you power. Is it or is it not obvious support? Weekly S2, monthly S1. Is it support? Yes or no? Then your job as a risk manager is manage the risk. Oh, but it might fall for, dude, nobody can see that looking at, 1 year's of trade history. Over the 20,000 trades you take in a year, they're not going to say, oh, you could have squeezed 50 more pips out of that one. What you need is solid consistency. That's part of the discipline. Even if you think, well, maybe it'll go a little far, it doesn't matter. You do what needs to get done. Okay? Yeah, Ryan's like, oh, you're not talking about, yeah, yeah, that's right. The cluster of support, because isn't that what you're supposed to be managing? Okay? The mights and the maybes are dangerous. It's dangerous thinking. The mights and the maybes mean you're not in control and you're making decisions on the fly. Oops. Okay? The only acceptable response to that would be you're in a monthly swing. All right? You're like, Wayne, I sold in here and I'm expecting monthly S2 as my monthly target. Okay? You didn't make this up after the ECB meeting. Okay? 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 And that's that. And like magic, next week on the last couple of days of the month, we'll be tickling the projected bottom for the month of October, right? The central being the high predicts S2's bottom. So what is that, 115? So there's only 100 pips left. Looks like we're 261.8% of that initial move. Yeah, Joe. Yeah. I should be able to do that today or over the weekend. So anyways, fractal geometry. Oh, there it is. Yeah, you're right. I did set it up for you. Oh, solid film retracement. Nice. So I have a sell at 1780. So it's dropped 180 pips from that sell. Craig says, look to buy on Monday or Wednesday. Well, yeah, you could look, right? Yeah, you're thinking counter trend trade. Certainly plausible. Depends on the pivot where it opens and stuff. Do you take it on a Friday and hope it pops on Monday? You could. The one thing that I think is important here, Craig, is that this was not simply an economic release. Okay. This wasn't like ISM services and created a big drop. It's a central bank policy or impact, right? So, I think it has some more power. I I tend not to bet against such things. So if it opened Monday showing a setup off of a pivot, okay, you take it. But do you long Friday and hope to get the pop on Monday like some other setups? No, I don't think so. Like I just pointed out, I think this will probably go down to the monthly S2. I think it'll fall another 100 pips before thinking about going up. Wayne, Joe says, didn't see your reactions, Wayne, but were you expecting such a dovish druggie? I didn't think he was hawkish or dovish. I suppose if anything, I would have thought that, I guess what you're saying is a little differently from how I'd say it, but yeah, I guess I would have thought he would be a little more hawkish, which not being hawkish would be dovish, but yeah, I mean, yeah, some euro strength out of this was possible as well, but it had to do with mostly the market's reaction, right? So, but you know, I've learned over the years, and anyone that's been hanging around me as a trader for many years will know that I don't have any opinion of what some other person may or may not do. That seems like what the gamblers of the industry or people that need to sell a press release do, right? Like, oh, I think this guy's going to say that one. I think that's this other person. I don't. To me, it's irrelevant. I'm just they'll announce a decision, you know, and the market may or may not freak out, but often it freaks out, and those people are stupid. So I don't, right? So it's more like I manage the risk and I look for opportunities. Like, oh look, right? In your words, they'll say, oh look, Draghi's dovish, more okay. Euro's going down because the interesting thing is their taper is slow. Once again, 9 months, and then they're still not going to raise interest rates for years. You know what I mean? So I'm like, well, that's not bullish. That's not hawkish, right? So this ain't going up. It's still quite weak relative. However, I still would have thought euro could have strengthened. Honestly, could have. If I was buying companies, if I was a private equity company buying real estate or buying corporations, right, or even lending other countries money, so like a bond, a bond trader, or not bond trader, but a bond buyer, I guess, then a weaker euro is fantastic because everything's overpriced in the United States. So I'd love to tiptoe through Europe and pick some stuff up for cheap. Get low valuations, benefit from a lower currency, benefit from a stronger US dollar, my purchasing power, right? The purchasing power parity benefits me. Yeah, right, Ed. So you see what I mean? So, but when that happens, I do think that's going to happen. Like literally, I do think that's going to happen. You know, Europe is improving. So even if it's not a European country, European meaning like EU, like I don't know, is Romania in the EU? It is, huh? I don't hear a lot about Romania lately or ever. Maybe they need some bonds. Maybe they need some money. Maybe I need to go to Romania and say, how much will you pay me for my US dollars? Might be a good time to do that. What's the interest rate in Romania? Maybe I should convert my US dollar into Polish zloty. Time to go to Minsk. Right? You like Belarus this time of year? But anyways, you might be able to pick up some high yielding current bonds and stuff. I don't know. But at some point, that's probably the better place to invest, just outside the United States, right? And maybe you go after some emerging markets. Maybe you go to the wild east. But the thing is, your money moves away from the United States. The U.S. dollar weakens, okay, and the other things appreciate. So Europe, I think, is next to benefit from money flow, from business cycles, from investment cycles. Okay? But that's me. I might be wrong. That's just me. That's what I'm thinking. So look at all my failed trade plans. Gee whiz. Hey, Batman? I got nothing but failed trade plans. Sorry. What looks best? Oil? Oil hit my mark. Yeah. So I think we could say it hit 53. We're getting close. Yeah, we haven't had too many stones lately, though, hey? But, you know, it's been a disappointing October, so things are kind of moving along. So oil is still going up, but the Canadian dollar is weak. Well, the U.S. dollar is ripper strong, right? And CAD, of course, the CAD central bank stuff. So that's too bad. But you have to admit, right, you don't see it often that oil is generally up and the Canadian dollar is almost entirely down. I mean, that's unusual, right? So, whatever. So, that's that. Can't win them all. Forex.Today. So today is going to do the day that I'm going to throw it back to you. All right. All of this is GDP. Consumption is part of GDP, and GDP is part of GDP. So we got that. Yeah, disappointed in CAD. Yeah, and it's happening at the exact same time the U.S. dollar is strong too, right? But it's Trump. It's Trump. I don't know how people can watch TV. I really don't. I just don't understand it anymore. I don't belong on this planet. I think I'm going to move. I just love it. Like you turn it on and it's like just people saying the most ridiculous things I've ever heard of. And I still hear things like it's Hillary Clinton. And then you change the channel like, oh, it's Trump. Like, wow. Somebody told me that Bill Clinton's a drug dealer. Have you heard this one? And he's like, oh, serious? No, there's a video and everything. I'm like, what do you mean there's a video? Oh, he's taken off in an airplane full of cocaine, and there's like a kid shot at the airport, and Bill Clinton's in the airplane. I'm like, what are you talking? No, you haven't heard. I'm like, wow, this is great. I'm so happy I don't watch TV. Stefan's like, can we short it again? I guess, well, I can't complain about that. There's no video. I haven't uploaded the video, but we did talk about it yesterday or the day before. So, okay. Yeah, we can do it again maybe. But generally not till Wednesday. You're early. But anyways, it's Trump's fault. Yeah, exile myself. All right. Peso. Where's my peso? I don't even have. Did I take it? I have it here. Oh yeah. Do you guys remember this from 2 days ago? I have nothing here except resistance I identified earlier. What these say is I might sell here, I might sell here, I might sell here, and I might sell here. Where would I buy this? Nowhere! Thank you, Robert. Oh my gosh, does that mean I have a bias? Oh, Robert said not here. Oh, wait, I take it back. Give that back, Robert. You're like, no, this is my trophy. Give it back. Yeah, there you go. All right, here. Nowhere. That's a bias. This is what you're supposed to be doing for a living. What's your bias? I don't know. I'll see you later. Yeah, I don't know. I don't know what my bias is. I look at the chart and we're like, oh, I guess it's up today. Right? It's you have to write it properly. I guess it's up today. Yeah, I think I'll buy it? Question mark. Oh yeah, you're a professional money manager. Oh well, I shouldn't buy it then. You think I should short it? Now that's being quite facetious, maybe even a little bit insulting. So I take it back. I am sorry. I am sorry I've insulted your intelligence. Here's what needs to happen. I've explained for years my point of view for this particular currency pair. I think about between Wednesday and Friday, a little bit of Mexican peso strength. I'm guessing it won't be much because of the day of the week that the first of the month takes place. So it would probably be sorry. But that's an opinion, right? And opinions are helpful. Why? That's correct, Ryan. If you don't stand for something, you'll fall for anything. Love it. Because it's predicting the future. Now, if you've predicted the future, what's the upside if you're wrong? What if you're wrong about the future? What's the upside of being wrong? You can learn. You can get it right. You'll be right in the right times. Lessons learned. Try again. You can also get out You can also say, oh, I need to stop trading. Have you guys ever had like a bad day, like you lost a lot in one day? Yeah. Was it the first trade that was the worst? Or was it the last few? Right? You're like, boom. Oh, that just blew up my whole day. Exit. I'm going to walk away now. Right? It's usually the one, it's funny, to me, anyways, the days I've lost a lot of money, it's never the first trade of the day where I lose a lot of money. You're like, you're waking up in the morning, oh, I don't have a trade plan, but I can open up my charts and put all my money into it. Oh, right? It's never the first trade, is it? You're like, oh, I lost money. I guess I'll try again. I guess it's going up, not down. All right, long. So my point is, if you have a plan days or weeks in advance or even hours in advance, and you get a setup and you take the setup, which is now the second part of it, you have a strategy and tactics. So if, for example, if you're selling at resistance, how wrong could you possibly be? But when you are wrong, what do? Take the loss. You're like, whoa, that resistance really was weak. Cut through that resistance like a hot knife through butter. Or in America, through like fat fingers through Crisco. And you're like, that's that. I got to wait another 80 pips to get to the next level of resistance. That could take all day. Right? Guess I got to fall back. Isn't that a better way to lose money? You know exactly when you're wrong. There's no debate. You're not winging it. It's not video games. Do. Sell. Oh, lost money? Okay. Bye. Uh-oh. Bye. Bye. Oh, crap. I blew up my trading account. Oh, that was the worst 15 minutes. 97 trades in 15 minutes. Yeah. I guess a 4 pip stop loss wasn't the proper way of handling it. So, you make, I mean, again, really, if you're selling at resistance, how wrong could you possibly be? You know you lose most of your money when you're just winging it, right? Bet you anything, if I looked at your worst days, you're buying and selling the same currencies at the same time sometimes. I've seen it. I'm like, I've mentored people time to time, maybe 50 people over the last 15 years, right? I'm like, all right, let's take a look at your trading. So I'm looking at the trades, and they're like, Wayne, I'm very inconsistent. Okay, give me your trades. I'm like, dude, you're long Euro Yen, and you're short Euro Swiss franc. So I don't get it. Like, none of that makes sense to me. This is why you're inconsistent. Oh, well, the 5A cross, and I slapped him. And I said, don't you look me in the eye, boy. Yeah. So my father started crying. Yeah, oh yeah. Yeah. Well, I don't know. Yeah, but anyways. Yeah. Yeah, I've only seen my mother and father together at the same time twice in my life, so it wouldn't be that. So, anyways, yeah, it just doesn't make sense. And I bet you anything, your worst days, birthdays are the worst days. Your trading is incoherent, undisciplined, unthoughtful, at the very least. And then lastly, you're either incredibly early or incredibly late just because you're doing everything possibly wrong, right? Versus simply identifying the market, having a strategy, and selling at support or buying at, or selling at resistance or buying at support. Yeah, unthoughtful, right? I mean, that's a great way to describe, because, you know, I've had bad days too. And it's just like, oh my God, it was like I had ants in my pants or something. Like, I'm like, oh my God, and my hand was like slapping the, you know, sell, buy, sell, buy, sell. I'm like, oh my God, how was I even supposed to make money? Right? In scenarios where just statistically making money would be almost impossible. If you looked at your trading, there are probably scenarios in which making money was very unlikely. So, like, let's say I identified this as a downtrend. I'm not saying it is, but could I possibly identify this as a downtrend? Yes or no? Is it plausible to have an opinion of down? You don't have to like it, but here's where this is the first day of the month. There's a low, right, on the middle of the month. Well, the month meaning from the left side to the right side, okay? But that seems like, and then the high is up here. So there's the open, here's the high. So you might disagree with it, but do you think it could possibly, maybe, using some sort of technical analysis to say, yeah, it could be considered bearish, right? Okay. So on the 31st or the 1st of the, right, coming up next week, could you maybe, and I don't mean like might, but is it statistically reasonable, plausible, and probable that if you shorted at one of these levels pre-identified, and you have to look further back, but, you know, let's say up here at 26, right? If we're here on the 1st of the month and I saw it roll over and I shorted, would you say it's reasonably plausible that I could make money? Knowing that I'm at a 50% ripple pullback, no, well, I'm guessing 50%, that we're at a psychological level, that we're at price role reversal, and 2.4 billion is moved from the left to the right, from USD to Mexican peso. We know it'll be 2.43 billion. It might be 2.44, it might be 2.42, but I'm going to say 2.43 billion on that particular day, or something, a big portion of it may roll over at that point. Knowing all of that, is it fairly reasonable to think somebody might sell there at exactly that time? Cool. And if I'm wrong, how will I know? Yeah, and will I have to move my wife and children into an igloo made out of Georgia clay? Yeah, yeah, probably not. I was in Chengdu many years ago, and I had just finished having lunch with the governor of Sichuan and the mayor of Chengdu, and I've described Chengdu as like being Chicago. Anyways, and I'm getting this tour on this bus, and it was part of a big business envoy. There's I think 12 executives, and I was the currency guy. Anyways, and also the VC. But anyway, so we're on this trip, and everything is brand new and beautiful. The architecture is crazy. The city hall of Chengdu is nuts. It's like a piece of art in which 1,000 people work, right? And it's all built on US dollars, or at least on my mind. I'm like, this is all American money. This is great. And then the bus stops at a stop sign. And two things I remember. There were women digging and planting flowers, but they're wearing like designer jeans, like bedazzled and everything. I'm like, look at these women bedazzled and planting flowers along the front of the highway. And then further along, there was this guy. He had built a house out of bricks. He had pulled out and carried from one of the old buildings that they knocked down, right? And he built a house out of it. And he decided, I guess, 5 feet from the road would be the place to build this sucker, even though there was giant empty fields. And no mortar. Yeah. No mortar. Like, so yeah, I'm like, sorry wife, sorry kids, I bet it all on the Mexican peso. Boom, 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 boom. Son of a gun didn't fall, right? No, I think if you have a solid trade plan, fundamentally and technically, long-term and short-term, I think I'll do fine. I'll either make money or I'll lose money. But can you do that with every trade? Or do you ever get caught up in the video game aspect of trading? It's very easy to get sucked in. Has anyone spent like 1 year just doing short-term trading? Let's say 15-minute charts and lower. You're exclusively shorter time frame. I wouldn't even call it scalp, but spot and scalp trading. It's supposed to work that way, Ryan. I know most people don't do that, but if you posted your trade plan and then traded it, I think you'd become a better trader. But anyways, okay. Jim has, Kadir has, and I think most people lose money. I think we can agree with that. Some people break even, and some people make money. But I'd say 70% lose money, 20% break even, right? And 10% make money. Like Marina's top 10%, I'm sure of that. But then you ask the people that are successful, and you'll find out that it's a hell of a lot of work. Because you're always working. It's a lot of work. All right. It's not a lot of work. Come on. It's a lot of work. But so we'll take Marina as an example. I hope you don't mind, Marina, because we don't really know each other that well, but we know each other well. Okay. Now I lost my train of thought. I had this great Marina discussion. I think you would find that those who are successful like Marina are successful because they do the longer time frame trading. And I like that, by the way. That is what I do as well. You make decisions on the higher time frames, like a 4-hour daily, and that is similar to fundamental analysis. Yeah, we'll kick that out. We'll go check it. Thank you. It's similar to fundamentals. Okay. So Marina, do you make more than 20 trades a day or less than 20 trades a day? Look at that 618 rejection. This is crazy because this is where it should have dropped, right in here. That was a great 618 sell, and it fell. So anyways, what do you want to do? Is that too much? What is that, 15 pips? Right. All right. So Marina says only makes 2 or 3 trades at most. All right. So I would call that spot trading. Right. So a scalper or something in between would make more than 2 or 3. So someone making more than 2 or 3, it becomes a lot of work. Like literally, you're sitting in front of your charts all day, like a job. You're spending 8 hours a day trading. Okay? Which is different than a spot trade. Like a spot trade, what you're doing is like, let's say, sell at the London Open, stay in it for let's say between 2 and 4 hours, and then New York opens, get into a trade, stay in it for 2 or 3 hours, then London closes, and you're basically done. You could also have your charts open and literally make 20 trades or more per day. Yeah, I'm not saying it's not following plans. It's even shorter time frame than that. Okay? And you can do very, very well, but you better be very, very good. But even if you're very, very good, it's just a lot of work. But it's exciting. Some people like it. I mean, I did it like for years. You just kind of get into the groove. Like I had things down where I'd say, all right, in 16 minutes, this is going to flip. I mean, literally, I would say things like that. Oh, 16 minutes until it flips. But boy, it's game on 24 hours a day. Yeah. Yeah, so I don't know. Just out of argument, Marina, I would call you a spot trader. So I do more like 1 or 2 in Asia. Then yeah, now you know what you're So I do 1 or 2 in Asia. I do 1 or 2 in London. I do probably 2 or 3 in New York. That would be you know, that just described about 8 years of my trading. So yeah, no FIFO, Johan. Accuracy? I don't really care about accuracy. So I probably used to know. That's just one statistic that just doesn't matter. So it's funny. I thought I could even pull that out and tell you, but it's so that one particular thing is nobody cares about. I'm sorry to say, um, it's irrelevant to an investor, for example. And as I have analyzed several hundred traders, and the worst ones are ones that claim to have a high um, percent of accuracy. They're extremely accurate because they never take a loss. And they're like the worst traders ever. Because that's the a-hole that's going to lose all your money. But if you want to go to like most profitable, well, let's put it this way. Imagine having 100 trades open and 98.5% available margin. What does that mean to you, Adir? Low leverage? Yeah, yeah. But it doesn't matter the risk you're taking. Okay? Doesn't matter really. What does it mean to have 98.5% available margin, but 100 open trades? Thank you, Jim. Most are, they're virtually all profitable. About 98.5% of them. Right? It's true, Marina. But there are better, and let's say there are more successful and or less successful strategies for hitting certain goals as well. Well, I said in that scenario, I have new trades in the market or some that are losing. Okay. How long did that take? 6 months. Yeah, but would you assume that there was a reasonable path to profitability? Yeah. And I got one more follow-up question to Hadir, but I'm waiting for Hadir to answer to the last question. Where's my Hadir? The question was, do you think that was a reasonable path to profitability. No matter what your leverage was or lot size or whatever, letting your winners run. Okay. If I had closed all the positions, boom, 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 and I said to you, Hadir, 98.5% of my trades are winners. Is that the relevant information? Yeah, but Hadir, it's the wrong question, and it's holding you back. Okay. So what is more relevant information? That there are 98.5% winners? Now, bear in mind, I got there because I slowly cut out all the losers. Do you understand that? That along the way, I probably had just as many losers, but I cut them out. I cut the fat on the portfolio. So then all of a sudden, I can wait for a new month and then dump the whole position and say, look, in the month of October, 99.5% all winners, and there's over 100 trades in a row. Boom, 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 boom. Okay. What matters is it was 15,000 pips. But someone would show you something like that and say, look, 98.5% of the trades are winners, and there's over 100 trades, and they're boom, and like what, and all of the month of October. Well, what you're missing is it took all 6 months or more to build that there were lots of losers along the way. I've cut the fat, right? Small little losers, but then I'm keeping the winners, and I'm letting the winners run, so on and so forth, and I add, and then I subtract, and I add and subtract. Yeah, I say this, don't worry. Right? All that kind of stuff. The high percentage stuff is dangerous because it could be misunderstood in the way that's reported in the facts. But usually what most people do is they sit on their losers. And I've analyzed a lot of traders, the ones that even statistically look good. And then I see there are many times in the portfolio when they're holding very bad trades. And they're focused on the percentage of winners. Look at this. Wow. And it's like the least important statistic. And it's the most dangerous at the same time because it could be misrepresented in the trading history. Like you're like, damn, this guy's been trading and he's got 98% winners, right? Like this guy's great. But you don't realize there's times when they're holding, 20% drawdowns, but it's not reported because they haven't closed the trades. And you're looking at the stats, and it's got a nice curve. You're like, this guy is great. This guy is consistent. Look at this. No down months, 98% winners. Right? And you're watching them on some sort of, following platform. You know what's dangerous about that? They have 19 different strategies going on all the different platforms, and they're showing you the one that works statistically. And again, it works statistically because they held a whole bunch of losing trades that reversed and went up, and now it looks good. You got to be very, very careful. If you were to pick a trader to manage your Forex money for, right? If you're looking to invest into a trader, you would want to find a trader that can take losses, takes them quick, not too quick, but like when it's technically over, they're out. So there are lots of little losers. You want to see lots of little losers because they know how to take a loss. They don't risk your money in a scenario that could one day blow up your trading account because all of a sudden there's a 20 or 30% drawdown. You don't want that. You want someone to say, I have a trade plan, I set it up, I sold at resistance in a downtrend, everything was good, then some sort of news came out, started making higher highs, and I had to bail. I had to cut loose at, minus 25. Come up with a new trade plan. That's actually what you want. So my guess, it's more like 65-35 is what you want to look at. How about 66-33? Would be a great trader. But you might misunderstand too that a 50-50 trader should be wicked profitable. You could lose 2/3 of your trades and be at break even, money-wise. And then you could say, well, obviously there's a problem there. But I'm telling you, you could be basically a 50-50 trader, but be wicked profitable. You get in some trades and it fails, and you get out before it's a big deal. And then when you get winning trades, you pick up some pips. You're like a monster pipper. Your average loser is 25. Your average winner is 50. And 50% of your trades are winners, 50% of your losers. What does this mean? You're wicked profitable. So, hey dear, go for 50%. But what's the statistic that matters? If it's not winning percentage, because you're break even on winning percentage, your winners are bigger than your losers. Now, what if you were 66% winner, 33% loser, but your average winner is twice as big as your loser? You understand? Now you have twice as many winners, and they're twice as big. Talk to me, Goose. What does your profitability look like? 33% of your trades are losers. But 2 out of 3 are winners, and the winners are twice as big as your losers. It's huge. You're like ridiculous. Right? It's ridiculous. Your success is ridiculous. But it comes down to your winners are worth it. You make money when you're right. The amateur traders screw it all up, right? They do everything wrong, don't they? Their losers are huge and their winners are weak. Just flip it all around. Don't worry about it. I think you can get to 50-50, right? Does everyone believe that that's reasonable, that you could achieve a 50% winning percentage over the course of a long period of time, like over the course of a year? Half your trades are winners. Is that reasonable? Do you reasonably believe that you can meet that basic expectation? Because remember, I'm sure you're doing these business planning retreats and you're writing all these rules out, right? And that your business plan is specific, measurable, attainable, realistic, and timely. And that you have benchmarks, right? Key result areas in which you're tracking yourself. And you say, well, right? If you're not doing KRAs, or maybe you're doing KRIs or something, but you're looking at things like 50% winners is a minimal acceptable performance, which means, think about it. You think your trade has a good setup, you trade it, and 50% of the time you're wrong? Oh my gosh, really? You're selling in a downtrend? Are you sure? And in that downtrend, you're selling at resistance? Are you sure? And still 50% of the time you're wrong? Holy smokes. So I think there would be two pieces of valuable information there because you're tracking your stats. Either your directional bias sucks, or your identification of support and resistance sucks, or maybe even both. And you're just lucky to be getting out at 50%, right? So you could probably even improve. So let's do it. Stay there. All right, you can achieve 50%. Okay, great. Now your next goal is, can you like keep your losers around 25 pips, let's say, if you're a spot trader, and can you keep your winners to like 30 to 50 to 100? Could you be going for that? That means you have to look for setups. But see, do you understand that that's how I got to minimal acceptable performance 15 years ago? MAP. We don't talk about MAP nearly as much, but if you read my book, you read my soul. No joke. So you're like, wow, minimal acceptable performance. If you'd be embarrassed to make 15 or 20 pips on a trade, you're like, oh my God, what the hell happened here? Holy smokes. Well, at least I hit my MAP. Okay? So you're like, wow. But you should be expecting 50, hoping for 100. Or 300. Let the winners run, bro. Right? The more you let your winners run, the bigger your wins are going to be. But you're like Marina and I trade a lot alike. I set everything up on a long-term chart, but I trade it like I'm only going to be in it for 2 hours. Then I jam the stop and I let the sucker run for a month, for 2 months if I can. So I have lots of little 20, 25 pip trades. I just lost 12 pips here, right? But my winners are beautiful. Oh, beautiful stuff, right? Damn, look at that thing run. Woo! Nice. And you may find that you only have 50% winners. Right? And your yellow Lamborghini and not a Giardo, your yellow Aventador will have a license plate on the back that says 50 wins. 50-50 wins, right? Wouldn't that be funny? LP 750, yeah. There's an 850, I think, now, right? Right? You're gonna have sushi. You're gonna have whatever. Silly thing to. But anyways, so whatever. That's what I'm saying. This is what you need to be focused on. By the way, the reason I bring this up here is if you go to a professional investor, you're like, hey, can you give me the guy the other day? Here's $1 million. Here, will you trade my $1 million? I'm like, no. And you're serious, bring your real money. But when a professional investor wants to look at you and analyze you, do due diligence on your trading, they're not interested in your winning percentage. They're interested in your losing percentage because that's their risk. And if you said, I'm a 90% winner, you've already lost. They'll just pack their crap up and leave. And you're like, where are you going? I'm a 90% winner. And it says, they'll turn around and say, well, you clearly don't know how to take a loser. And when we do our due diligence, we're analyzing risk management. You don't have any risk management, so we're moving on to the next trader. We don't need a cowboy. Good luck. Best of luck with your degenerate gambling. Serious. So that's why we put it that way. So have a bare minimum of 50-50 with winners bigger than your losers. And go from there. And I bet you over time, Hadir, because you'll survive, imagine 5 years from now, if you're trading every day now, imagine in 5 years how much better of a trader you'll be. Imagine that. That's where you want to get to. Most people can't imagine it because they don't even think of it. But if you can imagine it and then act, put actions toward getting there. The first action is survive. Don't get killed. Don't blow up your trading account. Just survive 5 years and you'll be better off. Right? And then 5 years from now, do you think your trades will go from 50% winners to 55% winners? Is that possible? Is it even probable? Like, you'd be surprised if it didn't? I mean, it comes down to what you believe. It has nothing. I'm not feeding you answers. It comes down to what you believe. Okay? So then do this. See if you can do the math. Do the math. You make 2 trades a day over the course of 300 trading days. So you're doing 600 trades a month or a year. Okay? Great. Let's say your average loser is 25 pips, your average winner is 50 pips. How many pips did you make? And then change it. 55% of your trades make 50 pips, right? And 45 lose 25. And then change it again. 60% of your trades make 50 pips. 40% lose 25. And start looking at like these little differences, like you're 3 percentage points better of a trader, and you're like, damn, I made like 10% more money. Okay? Then you'll find out the secret to success is assets under management. A loser would jack up their lot size because they're like, dude, I'm only making, 3,000 pips a year or whatever, right? You're like, only 3,000 pips a year. I mean, it's not a lot of money. $1 per lot or per pip, you're like, it's only 3,000. $10 per pip is 30,000, right? All of a sudden you're like, I got to make $100 per pip. You start looking like $100 per pip. Oh my God, I'm going to have to leverage to the hilt. I need 5,000 to 1 leverage. Or you're undercapitalized. Because the 5,000 to 1 leverage is, there's a bullet in every chamber, my friend. That's all I'm saying. There might be silver bullets, but it doesn't matter. Right? Or you've put in the blood, sweat, and tears for years. Do that. Get your 60-40. Get your average winner to be twice as big as your average loser. Show a sophisticated investor that you make money and never get into trouble. And that you're slow and steady, steady and slow, because that's the way you ought to go. And then money will rain down from the heavens. Because you are a shining light in a world of darkness. And the world is looking for a hero. It just happens to be you. And you get to keep 20% of all the wins. The money. Okay? Or just do whatever whatever. It's a video game. Just do faster trades, more trades, bigger trades, and just go for it. Parachute half open every day. It'd be super exciting. Okay? Peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. Sorry for it's a tough week this week. So thank you for your patience. I'm going to try to get all the videos up on YouTube. I recorded them, but it's been, yeah. I didn't study enough for my exam. Looks like I got a B plus, 2 shakes of a lamb's tail away from an A minus, but that's a big difference. B plus. Alan says, thanks, Wayne. Switching to TradersWay. Your expertise is invaluable, sir. Thank you. I'm also accepting donations for cigars. I have $100 in the pot. I kind of need about 300 or 400 to get the cigars. Thank you. I'm so poor. Give me money. I'm so poor. But if you ever need to throw a tip in the tip jar, that's always fun too. That's cool, Danny boy. Or Danny boy. But it does feel good when my buddies come over. They're like, hey, like a friend the other day, he just sent me a text, hey, do you have time for a cigar? I'm like, no, but swing on by anyways. And he's like, you know what? Every time I'm over here, you got different cigars, and they're always awesome and stuff. I'm like, clients. It's clients. They're beautiful people. They're thank you gifts from clients. And they're like, damn, Wayne. I'm like, yeah, I know, right? I know, right? That's what it's all about. I'm like, I know, right? Just beautiful clients. What can I say? Beautiful people. All right, I got to go. I have like a redonkulous day. I'm installing Windows. If you were to spend 6 figures, would you like buy a sports car with the money, or would you buy a Windows? Yeah, no. Yeah, would you buy a full? I'm telling you, I don't think you could buy a Tesla for this much. I mean, you could buy the fully loaded Tesla with the biggest wattage and the nicest seats and the best paint job and the nicest wheels and every upgrade and still have money left over. I'm like, for Windows. I'm like, really? Golly. Kind of sucks, right? But don't you have to do it? Kind of feel like an old man now. I'm like, I'm that old where I have to buy new windows for my house. Yeah, just board them up. Yeah, so Rob says, if you're cutting costs by having better windows, it's true. So I'm also putting on a new roof, spray foaming, putting in high efficiency furnaces, and I'm pulling all the ductwork out of my house. There's three stories. I got to rip out all this ductwork and put in super high efficiency ductwork. Wow! I mean, it's ridiculous. So the guy's in here and he's like, you're going to need 1 ton less furnace capacity. 1 ton less. That's a lot. I think I have 7 tons, something like that. Yeah, amazing, just amazing. So anyways, great way to spend money. Tell you, I'd rather buy the Tesla. Right? I mean, think about it. Look at my new Tesla, guys. What do you think? They're like, oh, that's awesome. Oh yeah, well this is the 100. Now it's like, hey guys, what do you think of my new ductwork? Woo! I spray foamed that biatch. And I'm like, wow. Look at these. Look at the glass on this thing, huh? You see that? That's low E3, buddy. Low E3. So I get to go have fun in the most boring way possible. Yeah, nice. Damn, some glass. Mm. But you're right. You're right. I'll save a lot on energy. So, anyways, Dan. So you're saying the sum of my life is that when my widow sells my home to some a-hole after I'm dead, he gets my roof, my spray foamed attic, my ductwork, and my high efficiency windows. That's the sum of the whole of my life. Look at them sweet windows. All right, what? Yeah. Oh, my kids. Oh, I'm not giving my house to my kids. What are you talking about? So funny. Damn. Yeah. All right. So, anyways, take care, guys. I love you, babe, but I got to jump. I'll see you Monday. I'll do better next week. I'm sorry. This is just a nuts week. So I apologize if I sucked, but if that was my best, that was my best. So better next week. Take care, guys. Have a wonderful weekend.